So for the first session, we're going to have two speakers. So I will introduce the first speaker, and then when he's done, I'll come back and introduce the second speaker. Our first speaker is no other person than Mr. Benjamin Boakye, who is the Executive Director at ACEP, the African Center for Energy Policy. Ben is an energy governance professional, and prior to becoming Executive Director, he served as the Deputy Executive Director at ACEP, managing the research unit and the programs unit. I think we're all very familiar with Ben and his immense contribution and the contribution of ACEP to governance in the oil and gas and the natural resources sector more broadly. Ben also chairs the stakeholder committee of the Millennium Development Authority, advising the board on the implementation of the power sector reforms. Ben has an MSc from the University of Dundee, UK, in energy studies, and a BA from the University of Ghana, the BAs in sociology with information studies. So I'm just going to hand over to Ben, and just to give you a bit of a heads up as to what Ben will be speaking about in this session. Ben's topic is evolution of petroleum sector governance in Ghana, successes, challenges, and recommendations. So he's going to pick up from where Mr. Egbefebo finished, and then he is going to give us our perspective. Ladies and gentlemen, Mr. Ben Boakye. Thank you. Ben, over to you.
Right. Thank you very much, Dr. Juliet, and good morning to everyone, distinguished participants. I want to share my screen. Okay. If I'm allowed.
Yes, Ben, you can share your screen.
Yes. Okay. So thank you very much, Dr. Juliet. What I'm hoping to do with this session is to be able to raise some context, challenges, and problems, and also tracking the evolution of policy in the petroleum sector of Ghana over the years. So we'll be looking at where we have come from, where we are, issues of investment and how policies are addressing that. And then some of the key challenges that I think we may have to push into the conversation to ensure that we can shape policy development going forward. So these broadly are the issues to expect from this presentation. So as far as policy evolution is concerned, Ghana has come through a period before commercial oil discovery, and then post commercial oil discovery, we have seen different forms of policies emerge. And before commercial discovery, it was really about government investment in the industry, and then also a period where we wanted to attract private capital to complement what government was doing in the sector. Post-commercial discovery, we deepened that private investment attraction and also an attempt to push more investment into the sector. So if we look at the period before commercial oil discovery, Ghana government set up the GMPC and also the Petroleum Exploration and Production Act, PNDC Law 64 and 84, to regulate the petroleum industry. So we had a national oil company that essentially was supported with money, to acquire assets and also build human capital to be able to explore and discover oil for the country. At the same time, we were looking to attract private investments. So we had a fiscal regime that was probably repulsive for the state of the industry at the time, where we considered Ghana as a graveyard, so investors were not really interested. We had Petroleum Income Tax Act that was demanding about 55% corporate income tax from investors, and royalties were typically about 10% at the time. So it actually generated a situation where we had to keep investing more into our own efforts through GMPC to see what we could find. But that changed significantly between the period 2002 and 2007, where we decided to deepen investment attraction by promoting what GMPC had achieved by gathering data over the period that we were investing in it. So aggressive investment attraction was pursued to bring in private capital, and that required that GMPC did a lot of roadshows to sell the data that they had to investors. But at the same time, the key question then was, how do you attract investment when your fiscal take was that high? So the decision was to review the fiscal take, bring the income tax down from 55 to 35 in petroleum agreements. And you will also find that between that period, royalty was around 4%, 5% in most of them, and 4%, 3.5% in some of the agreements that were signed between that period, 2002 and 2007. And that brought some reasonable investment into Ghana. We saw about 12 agreements signed over that period, which led to the discovery of oil in 2007 by Cosmos and subsequently by our tallow oil. So after we discovered oil, I mean, the conversations that Mr. Fable talked about, policy conversation about where we were and the need to re-examine the country's position, created certain assumptions that we didn't have adequate laws to effectively regulate the sector. And there was also the need for greater transparency, because at the time, nobody was interested in how contracts were negotiated or how revenues would be utilized, even when we discovered oil, and what other benefits we could get from the sector. So the need for greater transparency became a great assumption for new laws. We also thought that for benefits to cascade down and to ensure that we engineer economic transformation with oil revenues, we needed to have a revenue management law to be able to do that. And also independence of the regulatory regime was also another assumption, where we thought you couldn't have the ministry or GNPC that were really the contracting parties regulating the space. So we needed an independent regulator to be able to take control over the space and ensure that that independence actually existed. And also assumption around local content, ensuring that citizens can participate to ensure that we can benefit more beyond the fiscal take or what the contracts were actually providing to the states. So we needed to adjust our laws to accommodate local participation in the industry. So those assumptions really led to the evolution of laws, the passage of new laws to account for those assumptions. And Ghana has been praised for some of these laws that were engineered over that period of time. So you would find that we quickly, by 2011, after we started commercial production, we had the PRMA Act, passed to ensure that we can account for revenue. That same year, we passed a law to set up the regulatory agency, the Petroleum Commission Act was passed, and Mr. Fable talked extensively about the role of the commission in his speech. And then the local content LI was also passed. Amid some resistance from industry players, Ghana was still committed to ensure that citizens benefit from the industry. So we passed that law. After years of consultation on the mother law that regulates the sector, we were able to pass the Petroleum Exploration and Production Law in 2016. And subsequently in 2018, we passed regulation to actually give effect to the 2016 Petroleum Act. So if you pick them one after the other, I mean, the PRMA has ensured that there is transparency around revenues that we are getting from the petroleum sector. And that was because we established a PIAC, in law to be able to report, issue reports on receipt and utilization of revenue. The Ministry of Finance is also required to report to the public and Parliament on how much has come in and how it is utilized, with a broad mechanism to ensure that there's greater transparency. The Bank of Ghana also issues reports on petroleum receipts, and this allows the public to really interrogate how much is coming in, what are the issues to address, and how do we properly invest in the revenue. So the result of that transparency is that today you can track, how much revenue has actually come in from the oil sector. And as of 2019, we had received about 5.9 billion in petroleum revenues. The budget had received the biggest chunk, about 2.2 billion, representing about 38.6% of total receipts. GMPC, who is also required to be funded through the Act, also received about 30%, $1.8 billion. And then we also set up the stabilization fund and the Ghana Petroleum Fund, which have received about 1.27 billion, and then the Heritage Fund had received 5.5 billion, which is about 9% of the total receipts. So these numbers are available because of what we established in law, and that makes it possible for us to track where these monies actually are and how they are performing. So if you look at the performance of the Ghana Petroleum Funds, you would realize that the Stabilization Fund, 2011 and 2019, had a total return of about 65.9 million. That's the Ghana Petroleum Fund, actually, of which the Ghana Heritage Fund constituted about 44.2 million on returns on the investment that we have made with those funds. And then the Stabilization Fund got 21.7 million. Between 2011 and 2019, we had used about 903 million from the Ghana Stabilization Fund to support the budget and for debt servicing. A total of 808 million, constituting about 90%, really went into debt servicing, which we do know that currently we have about 100 million outstanding in the that fund. So the key questions that we have to still answer relative to the PRMA is whether the outcomes or the numbers that we are thrown at us really helps us to answer the objects of the ABFA, for example. And if you look at the object under section 21.2 of the ABFA, it says that the use of the annual allocation of the ABFA shall be to maximize the rate of economic development, promote equality of economic opportunity with a view to ensure the well-being of citizens, and also to undertake even and balanced development of the regions. And we have to begin to ask ourselves whether we've been able to achieve this objective relative to the support from the budget, as enshrined in the law. And also another question we have to answer is how has what has been the outcome of the stabilization fund, to be able to stabilize the budget. And if you track the periods, there are questions about how effective that fund has been to stabilize the oil component of the budget. In typical times where we had needed the stabilization fund, we didn't have enough money in the fund because of the focus on debt servicing. So it's a big question we have to ask whether that fund is really relevant, or we should think about turning it into a debt service fund. And are we also on course of achieving an independent national oil company through operational independence, prudence, and accountable internal decisions, which will enable them optimize, the position in the industry. So these three key questions remain outstanding based on what we are seeing with it. And on the ABFA component, some of the accountability issues that have come up in the past really is how you struggle to get responses from the Ministry of Finance on how revenues are actually utilized. And it started way back in 2014, where a balance of 666 million of the ABFA were told was swept by Bank of Ghana, and that was it. We didn't hear anything about it. Between 2017 and 2019, the ABFA kept accumulating unspent balance to the tune of 1.4 billion Ghana's cedis. We only got response towards the last election in December 2020. So it's always difficult for you to track how these revenues are used if you don't get real-time accounting as enshrined in the Act. We have also over time, ACEP has done work on some of the projects that are receiving funding from oil. You see ghost projects. The project you are told exists, you go there, you can't find it. And that continues to be a challenge. Increasingly, we're having that challenge of tracking many projects that are receiving money because of the thin spreading of the ABFA amount. And these infractions, you don't see any mechanism that Parliament has as the main oversight body to track, some of these issues. So budget goes through, it's approved, end of story. You don't really see much on tracking. PIAC, submitted reports to Parliament, but you still don't get that kind of accountability exacted from the Ministry of Finance on that. The Auditor General has also been challenged, in issuing its mandatory reports as prescribed by the Act. Out of 10 years, we have only 3 reports from the Auditor General to independently verify the accounts, because some of us who have been working on these issues, we have access to only data that is published by government and also by PIAC. But, Auditor General has powers to go beyond that to really verify all the numbers, but they're not able to deliver. They complain of resources that constrain their ability to do that. Another important policy issue has been the local content development. And as prescribed in the LI, we have seen successes achieved already. If you look at the chart, even by 2016, you would see Talo spending so much on local companies and joint venture businesses that local companies were participating in. And that can be seen with other players in the industry as well. Within the first 5 years, we had achieved about 81% local employment for non-technical roles in the industry. So the law hasn't been a fluke. We have achieved some results, and we see increasingly more and more money being spent on local businesses. But some fundamental challenges persist for us to be able to deepen the local content successes. And the last work we did on local content showed that we are still struggling to be much more representative in the technical areas of the industry. And that is something that we have to continuously examine to ensure that we can synergize efforts and achieve results. It looks like the imposition and checking the law is not really working in that space, because to participate, you need to really have the capacity to participate. And you often see that the oil and gas industry is taking over the training, but we're forgetting that there is a ministry in charge of education that has to really examine how education happened right from the primary to secondary to the university level to see how we prepare people to be capable of participating in all industries in the country. So we will need to work around those issues to see how we synergize efforts to achieve the right capacities that are required. And then the indigenous Ghanaian companies also have significant challenges that relates to finances, raising the required amount of money to be able to participate in the industry is a big challenge. You are in an industry that, talks about billions of dollars, and a simple contract can be several millions of dollars. So you need capacity, you need financial capacity to be able to even compete with foreign counterparts who have access to cheaper loans. If we don't have the banks and the lending rates, that allows these local companies to compete, it is difficult to achieve that in law. And the cost of participating in the sector and also inactivity in some of the blocks. I will talk about those issues subsequently. There's also pose challenge for the market and how some of these local companies can survive over time, because you have a contract today, the next 2-3 years you don't have any contract because activity is quite low on the oil fields. And issue of fronting, I think the commission itself has talked about it and still trying to see how they can navigate that challenge to ensure that we can really build capacity to take up the opportunities. And this comes to the reality that if we don't consciously develop capacity, we would have these kind of challenges because the local people don't have the money, they don't have the capacity. And if the law requires, then they are happy to front to take up the opportunities. So on the Petroleum Act 2016, that's one of the progressive things that happened in Ghana. It provides a new framework for upstream contracting, initially with competitive tendering as a default mechanism for contracting in the industry. It also establishes the local content fund, which is supposed to address some of the challenges I talked about earlier. Establishes the Petroleum Register, which is a milestone really for the industry, allowing citizens and industry stakeholders to see what is happening, what contracts are being signed on behalf of the citizens, and providing data on licenses and authorizations that actually exist. And we can commend the Commission and government for establishing the register. Initially, when we were engaging the Commission on what the nature of the register should be like, they were of the view that it could just be a list sitting at the Commission where you come in and you see which companies we have contracts with or which companies have authorizations. But conversation and deepened engagement, got the Commission agreeing that they needed to put everything up online for citizens to track contracts, and that has been done, which is a very good thing for the oil and gas industry and transparency. And also, the Act requires beneficial ownership disclosure. The regulation actually details out, and I was happy to hear from the CEO of the Commission that all the preparatory works are underway to ensure that that can actually be done. We saw that shortfall in the licensing round that actually happened in 2018, where the initial request for proposal did not require of the companies to submit beneficial ownership disclosure information. Okay, so this pushed the country really up to comply with international principles and standards, particularly the EITI requirements for open contracting, and also our commitment to the UK Anti-Corruption Summit in 2016, where we committed to subject the EMP law and make provision for competitive tendering process. And the attempt really to implement the EMP Act was actually done in 2018 through the regulation, where for the first time we went for a licensing round, which was a major test of upstream transparency. About 48 interests shown on 6 blocks, only 3 progressed to enter the bids. We are still struggling a year and a half on to be able to conclude negotiations on those bids. And the CSO monitoring report that was issued, which we worked with NRGI and other civil society organizations, really showed that some of the setback in that process was an attempt to coincide direct negotiation with competitive tendering, where some companies thought that, if they had opportunity to negotiate directly, then they would rather wait and not participate in the bid. And subsequently, we've seen that deepen, whilst you are even struggling to conclude negotiation on the bids that you ended, you are still engaging companies through direct negotiation. And that is a big challenge for the future of the Act. That beyond all these fine things we are doing and the policies and laws that we have passed, there are 2 key challenges that we can't deviate from if we really want to reposition Ghana as an oil-producing country and also ensure that the benefits from the sector can generate economic transformation. And that is the non-performance of a lot of the upstream contracts, which would generate the employment, the local content contracts, and all of that. And also the gas sector development issues that we have to deal with. The upstream sector now, we have a lot of contracts that are not performing. So you have 3 contracts that are into production, 1 into development stage, which was suspended due to COVID. And then you have 14 exploratory contracts. Our assessment of 15 of those agreements at the development exploratory stage shows that only 4 can be said to be performing, which is not good for the sustainability of the industry. 11 of the PAs are at various stages of non-performance, depending on who you speak to and the data available, against their minimum work obligation. They are not performing in compliance with their minimum work obligation, and yet they continue to hold on to the block. And that baffles some of us who have been watching this space to ensure that companies can be compelled to work, because that's what the contract actually says. And in all the contracts, you would find that if you're not performing or you're not spending to your minimum work obligation, you would have to be sanctioned to pay the amount that you should have spent to GNPC before you are allowed to progress. Yet companies don't spend and they don't pay the penalties, and they are able to still keep on to the blocks. If we continue to tolerate this non-performance, then the sustainability of the industry is really, really questioned, and we have to act on that. And the gas sector, this is perhaps one of the big areas that we have to really look at as a country to ensure that we can change course quickly. Otherwise, no law becomes relevant. We have been able to ensure that we, at this point, pushing all our power plants to consume the gas that we couldn't consume in the past. We have 3 fields producing locally, 10 Sankofa and Jinami all producing gas. A total production from the 3 fields in 2019 was about 169.5 billion cubic feet. Only 54 billion was exported for power generation and non-power usage. So you can see the vast margin of gas that could not be produced because we don't have capacity to consume that gas. Regrettably, also, these gas are take or pay. So whether you take it or not, you have to pay, particularly the OCTP gas. So it is an urgent conversation to be had to ensure that we can consume the gas. Beyond that also, we have gas still coming from Nigeria under take-or-pay contract. In 2019, we received approximately 1 billion standard cubic feet, about 37% of total gas supplied from various sources. We have built some infrastructure which allows gas to be consumed and reversed to from west to east. But the critical issue about how do you consume that gas and how other policies align to that gas strategy is really, really important. And if you look at government's own document, and we see that the projections are not really the way it should be to ensure that we actually optimize the gas sector. We have a minimum domestic supply capacity of about 340, and currently demand is about 320 million standard cubic feet, which really shows that even with the domestic gas, we still have excess capacity. And even beyond the minimum of 340, some of the fields can produce far more than that. We have cut production for 10 in Jubilee because that's essentially free gas. And that is to allow us to be able to import another take-or-pay gas from LNG, which is a big challenge when you are committed to paying $500 million per annum on the OCTP gas. We have the LNG infrastructure developed, which we think is okay if we have to absorb that into the tariff, but to add the commodity to it could be very challenging for the fiscal position of Ghana and whatever gains we are making from the oil and gas sector. And if you check government's own document, you will see how glaring the challenge could be into the future, where the energy sector recovery program estimates that if no action is taken, the energy sector revenue shortfall would amount to about 12.5 billion by 2030. So we have to pay attention to that to ensure that we are not deepening this kind of challenges and its implication for the oil sector. And if you are, at this point importing more gas, how do you incentivize investment in the upstream sector for you to be able to, on the back of that, also produce oil? So these are some of the challenges we have to deal with. We also have to deal with institutional overlaps in the sector, and that creates some policy inconsistencies in the gas space. If you track the history, we had GNPC at one point who started initiating the commercialization efforts. Subsequently, they took that role from GNPC and set up a separate entity, the Ghana Gas, to perform that function. GNPC had to come back to become the gas aggregator based on a Gas Masterplan, which actually dictated that they are the only company that had the financial muscle to really offtake gas development in the sector. Another policy reversal has emerged, which is introducing or has introduced a shift from GNPC to GNGC. I mean, this kind of inconsistencies is too fluid for effective policy development in our context, and we have to check some of these issues to be effective in the industry. So concluding on this, I would say that Ghana has developed many important and regulations that should aid good governance of the sector. The major challenge has been implementation, really. How do we ensure that the changing context doesn't fail to account for past decisions and why those decisions were taken? The independence of institutions continue to be a question, because, I mean, it will be difficult for even the Commission to tell us today, but you would have decisions where you have the Commission to take, and then the Ministry is also taking counter decisions, even though it is not a regulator. We need to allow institutions to work if we are to give effect to the laws and the policies that we are engineering. it looks as if in our context, the laws and the policies are made, for the next government and not to govern those who actually make the laws. And that is a very difficult challenge to actually navigate. And if you do that, the institutions cannot deliver and be accountable to the states because of the persistent interference. So we would need a binding requirement on broad policy direction for all political leaders to be effective for harmonizing and directing the context. I think I've taken enough time. Thank you very much.